Hey folks, it's Simon here with your Tao Daily for Friday the 21st of March 2025. Friday was OpEx. We had triple witching options expiration today. Biggest one ever. I think I read somewhere there was $5 trillion worth of options contracts and futures and options on futures expiring worthless today. So, you can always expect some market shenanigans on a day like that. Ultimately, though, the S&P managed to close pretty close to flat, rallied well off its lows. The Nasdaq managed to close slightly in the green. Now, looking at the S&P daily chart, I mean, all we've been doing over the last week is chopping wood. It's been a fraught week. It's certainly felt like hard work. If we look at a weekly chart of the S&P, you can see we've got like a little hammer candle here against the 50-day SMA, and here we've got a little dodgy candle. But the S&P's actually managed to close the week out positive. I mean, it's small gains, plus 0.2%, but that's the first positive week in the last 5. So it's holding sort of just under support. It's holding just on the 50-week simple moving average, so it hasn't capitulated just yet. If we look at the S&P 500 futures, you can see this line I've got drawn on the chart. That was previous all-time high back in July 24. Acted as resistance there, obviously, support. Now it's kind of acting as resistance. If we drop down to a 1-hour chart on the S&Ps, you can see how this area is acting as a bit of a magnet. Price sort of paused there, bounced off it there. A lot of chopping around it there, and now it's acting as resistance again. This chart is not overwhelmingly bullish, but price is at least above the 200-day moving average, which is no longer pointing down. It's now actually curving up slightly. That's not the 200-day moving average, it's the 200-hour moving average. This is a 1-hour chart. But you can see how on the shorter time frame, we're range bound. We'd like to see a breakout of the box, but kind of the alignment of the moving averages has shifted slightly more bullish. There's a lot of talk about the death cross in NVIDIA. You can see here the 50-day moving average is crossed under the 200-day moving average. That is often seen by technicians as a harbinger of awful things to come. Let's have a look at previous death crosses on NVIDIA and see what happened. So this is the last one that happened, the most recent one before yesterday's, back in April 2022. That was kind of bad, right? NVIDIA went to fall about another 30%. If we look at the one before that, just here, I mean, that was pretty negative too. Now let's go to the one before that. So this one back in July 2015, well, you ask me, that was actually a buy signal. That pretty much nailed the bottom before a massive rally. And then this one back in May 2012, I mean, it just led to an extended period of sideways chop. NVIDIA made very little progress for an entire year. I mean, it was pretty volatile in there, but it certainly wasn't kind of a death knell. All right, so don't take so-called death crosses at face value. That's what I got for you. I hope it helps, and I'll catch you next week. Thank you.